Hey everyone, welcome back to Crypto Cash. Thank you very much for joining me here. We're taking a look at Bitcoin, obviously helping understand what's going to happen next, at least trying to anticipate here, because it is doing what we're expecting it to do. Pulling back, retracing after 9 straight consistent days to the upside. Makes perfect sense. In fact, it looks like it's trying to consolidate right at that support at 17.3, and that's a great sign. Furthermore, too, we can see traditional markets are up by a half to a full percent. Dollar index is kind of drawing even, and at this point, we can expect Bitcoin probably to either continue going sideways and or down. We're going to draw some new Fibonacci retracement levels, obviously, to kind of see what that looks like. We'll reverse the fibs as well, kind of get perspective on the new support levels here, but before we do, we're going to go ahead and make sure to kind of extend out some of these levels here, just so we have those larger term time frame Fibonacci retracement levels, because again, the larger the time frame for Fibonacci, the more impactful those support levels are. Right, so that's why I like to use larger time frames and not adjust it too much, because it is important to kind of understand what the big dogs are looking at, because they're the ones drawing out the same Fibonacci retracement levels. Right, they're not constantly just adjusting it on small time frames. You want to be careful doing that. Either way, enough about that. We'll go ahead and look at that, and I'll explain that too. But if you are new to the channel, just keep in mind, I do love teaching. I've been teaching and trading for 17 years. CryptoCash.tech is the site if you want to become a community member. Link down below. We have an awesome Discord where we take healthy profits in my swing with some of my trades that are, some cases day trades, sometimes swing trades. 220% in 20 hours from Solana. That's not too bad. We also took some profits earlier today, 43%. That was yesterday, 43% in 2 days from Bitcoin when it hit 17,400. So again, really awesome stuff there. Just be patient, of course, because signals, they can't just trigger instantly, and you don't take profits overnight. But most of my community members doubled their portfolio last month. They're also using Bitget as their best exchange, my favorite exchange. I've used Bybit, I've used KuCoin, a handful of others, and this is what takes the cake. Bitget is the best exchange you can use. They provide my community with a $10,000 prize pool monthly. So if you use the link down below, you'll be eligible for that. All you need to do is have a decent profit and loss ratio and or trading volume. It's really simple. All you have to do is just do your thing and you qualify in most cases. You also need a VPN as well, so make sure you check out Express. They're my favorite VPN. Again, in the world, they've been fantastic to me. For me for years, and you actually get 3 months free with a 12-month plan, and it's not that expensive. You will need this, of course, to protect your investments, and also more important, obviously, you want to use leverage. You have to use a VPN. All right, so here's the thing with Bitcoin. What we want to talk about is drawing out the new fibs first, but just to clarify, we're overextended to the upside here. We broke through that resistance level, essentially using that as a support. So 17,300 should be the support now. Okay, that's the key. For right now, we can expect that to hold based on previous retests of that level multiple times. So just generally speaking, we're overextended to the upside, but we're also consolidating above support. This is a perfect place to be. Another couple of days trading. Hopefully we survive CPI data tomorrow and the price continues higher. If we have further inflation, we can expect the price to go down. I don't recommend taking a lot of trades into tomorrow's trading day. Again, 8:30 a.m. Eastern Standard Time, we will get CPI data released. So I'm going to wake up to a whole new world tomorrow. Right? So again, fun stuff there. Either way, let's go ahead and draw out some new levels here and kind of see what's going on. Because again, we've got these current ones. Let me go ahead and extend out just one of these lines here, just so we have that as well. And we'll go ahead and get rid of this. So again, right there at 17,300 is a support level. 17,000 even is also another support. We've got two nice key level fibs support levels, right? And once again, just to clarify, it's a 0.618 and 0.5. Those are two really strong areas. Oftentimes this can be referred to as like the golden range ratio, something to that effect. I don't call it that personally, but 0.5 to 0.618 Fibonacci, that's a very strong support or resistance zone, okay? So we're above that. That's great. We also have a decent amount of volume below the current price point. That's also super healthy, super awesome. So good stuff here. The likelihood of the price maintaining 17,000 or higher is extremely high right now. That being said, let's go ahead and remove this fib here and add a new one. And we're going to probably likely reverse it so we can get perspective on what that looks like. So again, when you're reversing Fibonacci retracement levels, this just kind of, it helps on uptrends like this where you have ascending type of trends that you still haven't broken. And the potential of the price coming down is higher, just in the regard of the price coming up, right? But for lack of better terms, we should expect the price to continue higher moving forward. So I'll explain what I mean by that as we progress throughout this video, but I can tell you that for right now, the probability of the price staying where it's at or going higher is greater. pending no ominous, super stupidly obnoxious news tomorrow from CPI. Okay, so inflation is just one of those things that's really affecting the markets, and you just got to be aware of that. So anyways, that's where we're at here. So let's go ahead and kind of talk about what we see. First of all, we're not above 70 on the RSI. So while this was a long overextension, 10 days straight of continuation of the upside, it was a healthy continuation. We established that yesterday. We're not really getting rejected at 70 when you think about it. It's a standard retracement based on profits needing to be taken with a full week of trading, unless profits essentially hadn't been taken. Plus, we're above a key level support, handful of other reasons why this is not a bad place to be. We like to be between 50 and 70 at all times. MACD is losing a little bit of its momentum. We expect this to happen. We could see a divergence in the next couple of weeks, but for now, no big deal. We also want to take a look here, of course, at, the simple moving averages here. And we've established this already, but the fact that we're above the 50 and the 20, they're basically aligning themselves with this ascending trend line is a very, very positive sign. Okay, so ultimately we're in a situation right now where we can see that the price is doing well, it's honoring the ascending trend, and until this trend breaks, we have to expect it continued higher. Okay, so there's a good chance that the price were to come down, just say hypothetically, we'd probably see a bounce off that level. It's a very common characteristic as well. So we've got a lot of tried and true, like normal things going on right now. While we are overextended, we're not extremely overextended, we're not overbought, for lack of better terms. And if we're going to see a retracement, the pullback shouldn't be that major. It should be right here down to the level of about 17,000 at the worst case. That's why I have an alert set right at the 17,000 range, because if that happens, then I'll just essentially consider taking entry. I may even consider moving that up a little bit because, again, this trend line, etc., we shouldn't see a price point below 17K. That's just kind of it. So again, when you set alerts, sometimes it's best to have them kind of a little bit above a Fibonacci retracement level so you can kind of get in and check it out ahead of time. Okay. Again, checking out ahead of time is a key word here. You want to make sure that you are reevaluating and not just jumping in blindly. I covered that in Gala's video earlier today because a lot of people were asking me about the alert that I had set at 3.7. I basically just set alerts so I can look at the charts again, and then if I have confirmation I'm looking for, then I'll essentially, once I reevaluate, I'll then consider taking entry. But just because I have this alert doesn't mean I'm jumping in at 17.1. Okay, just keep that in mind. All right, so 4-hour time frame. What are we looking at here? Well, we're back under 70 on the RSI, which is good, but we've been above for too long. And as I mentioned before, you can't maintain a price point above 70 for too long. So it makes perfect sense the price is coming down to kind of bounce off this level, this range of 17,300. We have a MACD potential divergence. While it is diverging right now, it isn't necessarily shooting through that. So we are seeing some kind of support. Once again, you can see this green candle here. Doesn't necessarily mean the price is going to stay here, but it does imply that there is some buying pressure at the 17,000 mark. And what do you know? This bouncing point here is parallel with the most recent high, right? Because you can see when the price comes up here to retest this resistance level, this strong resistance a couple of times, that reaffirms itself as a new support. That's essentially what we're looking at right now. So positive stuff there from Bitcoin. Taking a look at the hourly, we want to go ahead and see if there's any overextension. It doesn't look like there is much of one. We came down to a 7 here so far. So while we are on the downtrend, it does look like it wants to try to bounce. So far, so good there. We've also came up to a 9 previously, and prior to that, we got some nice little resets. So in truth here, once again, these are very healthy continuations. I mean, take a look at how beautiful this trend is. Up, over, up, over, up, over, up, over. This is exactly the type of trend lines that I like to see. This is the most healthy continuation pattern we've seen from Bitcoin in a very long time. Because again, normally it's just like, it doesn't know what it wants to do. It wants to jump up and jump down, stuck on stupid, right? This is not stuck on stupid. This is strategic, beneficial, extremely realistic. I mean, you see how perfectly it's working within these Fibonacci retracement levels? Previous resistance, new support. Previous resistance, new support. Like, it just continues to rinse and repeat the same thing over and over again. But again, that has to come to an end to an extent, right? So why are they not going to repeat that action to the downside? There's a stronger chance we might see lower lows and lower highs moving forward. So to me, I recommend just kind of waiting, for lack of better terms. I know it's a tough thing to do, but it doesn't make a ton of sense to jump in right now based on today being the first day of retracement after 10 days consecutive. Plus CPI data tomorrow. If you're going to take entry today, make sure you have really tight profit targets. You take targets or profit well before this most recent high. Okay, because again, 17.5 is proven in its history to be a support and resistance level. And that's the case in point, the first attempt. We could very well see a reattempt, but I don't think it's going to be able to sustain that. Again, it's doing well. All things considered, traditional markets are up. That could be part of the reason why it's increasing. But I just wouldn't expect much more from Bitcoin in the immediate future. While I'm still bullish tentatively on Bitcoin in the short-term time frame, I don't think we're going to see it shoot through the roof here soon. If it were to break 17.5, just so you know, quick heads up, we're looking at 17.8. That was a previous resistance level as well, and other Fibonacci levels. But that's reaffirming itself there as well, and 18,000 even too. So 17.8 and 18,000. If you're going to set profit targets, 17.7 and maybe 17.9, just below those Fibonacci retracement levels. Because again, I like to teach that in my trading academy. It's really important to make sure that if you're taking profits, you put your profit targets just below a key level resistance and or support, depending on the direction you're heading. In this case, going up, obviously prior to a support, and on the way down, if you're considering that, just above a previous resistance. Okay, so again, handful of different little things you can do to consider, but generally speaking, trading is always dynamic. Consider always reevaluating before you take entry. And again, with these alerts that I'm setting, make sure if you're setting alerts, you reevaluate and sell yourself on the reason to actually take entry at that time, right? Because me at the end of these videos, I know full well if I'm going to want to take another position or if I'm going to be waiting. To me, it makes a lot more sense to wait until this time tomorrow to see how CPI data affects us, because buying into that is kind of just a bit of a gamble, a bit of a risk that I'm unwilling to take. Okay, especially for my community with over 200 traders automatically following my signals. I am definitely careful and cautious with my entries. Thanks again for joining me here. Hope you have a great rest of your day. Look forward to working with you if you want to become a member. Take care.